Well, what do you know? Probabilities played out again. We saw a bounce. Are we going to see a continued bounce? Well, we're going to talk about that in today's show. If you watched yesterday's, well, it played out kind of just how we thought it would, right? We wanted to look for a position to get in because probabilities suggested that the S&P 500 and various stocks were going to be seeing bounces take place. We saw the bounce. Now the question is really whether or not we're going to see this continued momentum to the upside. You're watching the Stock Market Beef Show. Stock Market, I try to say that without laughing. Let's just hop right into it. All right, everybody, welcome back. We're going to start here with the market dashboard. Let's take a look. Green across the board, other than utilities, which is utilities and consumer staples. What do you know? Real estate, we're looking at more defensive sectors there at the bottom of the list. What came up towards the top? Energy. Huge day in energy. And you can see here, green across the board and all the different various indices there. Dow, S&P 500, NASDAQ. Small caps had the biggest rip. We're going to touch on that today. But energy and industrials and materials there led the way. I'm not surprised. They've been getting beat up. Now we're seeing energy really catch a bid. But one of the big things there was watching oil. Look at oil up 3% on the day. That's a large move coming out of this downsloping trend line. Now we do have resistance right above at 74. Are we going to get some continued strength? I mean, take a look at the PPO. Okay, this little indicator here, it's getting above zero. It's, spreading. These two signal lines are spreading right there. It's very bullish context. It's not something that I would necessarily short, but sometimes when you get these rubber band type moves, you can get follow through, but sometimes large range candles, all of a sudden you might start noticing smaller range candles where momentum slows down a little bit, where it can consolidate or digest. But the energy sector's big move came with a lot of help here coming from oil. So this is one to watch. We broke down, a lot of people suggest oil is going a lot higher, so it's something that we really want to pay attention to. You can see here XLE kind of broke out of this short-term wedge, have resistance right overhead at the 100-day moving average, and that lines up with prior resistance right at around 50.50 or 50.51. It acted as support, and resistance here. So if you're thinking about getting into energy, I mean, it does look pretty powerful right now. It'd be significantly better if we could start getting above this range right here. The RSI, it's back above 50. It's pointing north, so that's not something that I would necessarily short into. That's just a preference. And then also, if you look at the PPO, it is below zero still, but it is, heading north here. So some strength coming in, clearly a big, strong move since, middle of August there in the energy sector. And it's been, the worst performing. So now it might play some catch up. We'll see. What we talked about yesterday, well, we said that the TLT was breaking out of the symmetrical triangle. It has a target of around 156. And we pointed out the fact that every time it comes into these sharp, rate of change type moves where the rate at which it moves up and then peaks, you can typically see that causes turning points in the S&P 500 in the stock market. So right here, 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 and here. And that's one of the main things where I was like, okay, we're coming into an area of resistance. We might not get follow through here. And if that's the case, as this is running into resistance and as the S&P 500 was coming into an area of support, and then you just look at the probabilities of every time it did it. It just made sense. It just made sense to go long into close and then play that also at open too if you were available to do that. But as it stands right now, inside trading day on the TLT, so it could consolidate sideways and continue higher. I mean, it still broke out of this pattern, but we need to get above 152. All right. The US dollar could be forming a potential bear flag right here. Now, the dollar was down on the day. Guess what? That's good for the equity markets. When the dollar falls, the equity markets have been rising, right? So if you can just look like right here on this big pull down right here, the S&P 500 started ripping up higher. And you'll see that theme. They have an inverse correlation to one another, typically pretty frequently. So if we get, and you have to look at the rate at which it changes too. So if it falls significantly, if it falls fast, that is very good for commodities like gold, precious metals, and various other commodities. But as it stands right now, we have a little bit of a hammer candle. This trend's holding. Hey, you never know. This we can still get a progressive move to the upside where the S&P 500 could consolidate more, and that could be the start of the day tomorrow. All right, hear me out here. The start of the day, because once we get into the 15-minute time frames, you'll notice that we're actually getting oversold on a lot of the charts. So if we're oversold on these short-term time frames, perhaps the dollar gets its bounce out of the gate, but then maybe it gets faded into if the S&P 500 and various other indices want to continue their rally. Let's hop into the indices. S&P 500 to start with. guess what? The bulls came back to save the trend line. Okay, we came to the 50-day moving average, missed it by a little bit. We didn't get the gap down that I wanted, but that's okay. We opened up flat pretty much. Okay, so that it's just the same thing. We've been getting gap ups overnight, and those get faded. Today, we opened sideways, you know, matching open, matching close, or matching open to the matching close, pretty much. And we rallied, right? I mean, we were oversold in a lot of signal charts, and then we rallied, okay? There's not much to talk about here. We just got to continue to watch it because let's point this out. This is the SPX, okay? We had 6 candles in a row that were all red. Are you surprised to see a bounce into support? You shouldn't be surprised. It was probabilities right here. So you want probabilities on your side, you play the long side because we're trending up. Not to say that it can't break down, okay? But probabilities were on our side. We had 6 red candles to the downside. Yeah, what do we talk about? When rubber bands get stretched out and you let go of that rubber band, it snaps back, and we're getting that big green candle today. But the question really is if we're going to get some follow through, and no one actually knows. Okay, somebody commented, you say maybe a lot. Yeah, because maybe it can do this, maybe it can't, but you got to set up trades because when that something does happen, you have a plan. Sheesh. Simple. SPY on the 15-minute time frame, falling wedge, we broke out, closed above the 5-day moving average. Pretty aggressive move. We got overbought here in the short-term RSI indicator, and the PMO also is getting pretty frothy up here. So yeah, I mean, as we're just a straight line up into these prior areas of resistance, if we get a gap up, I wouldn't be shocked to see that faded. And what do I mean by fade? It means if something's going straight up, and when I say fade, that means you're selling against the people that are buying in long. And if it was going, if the market was falling and you decided to fade a falling market, your hopes would be that it would rubber band kind of back up north. All right, so the 5-day moving average, it is still declining. Okay, it's still pointing down. So what we need to see take place, if you are a bull, you want to see this flatten out to start turning up. And what you want to see the S&P 500 do, or the SPY, is to digest its gains. You want to see it pull back and kind of move sideways and then potentially break out and boom. And then see the power and get this start curling back up and heading north. Okay, that's typically the more safer type of trades when you trade with that trend if you're an intraday trader looking at the 15-minute time frame. Let's look at the VIX. This is crazy. So the VIX, not on the 30-minute chart, but if you look at the 15-minute chart, it's definitely oversold. What does that mean? Well, this is the fear index. So, hey, if it gets oversold, it could say, oh, okay, we might bounce. And what does the bounce produce in the VIX? Well, if the VIX is going to start moving up, that means fear is increasing. I mean, that's just in simple terms, right? It's obviously a lot more complex than this, and you have volatility traders and all these professionals out there. I'm just looking at simple support, resistance, and technical patterns. Okay, you can get very, very complex in this, or you can keep it very, very simple. All right, and as it stands right now, this is a very strong move to the downside. So what do you think traders might think? Well, as we're coming into this very tight falling wedge technical pattern, as we're reaching down past the lower Bollinger Band, well, this time frame is getting a little extended. So would you be surprised to see volatility spike a little bit and maybe then get faded? I wouldn't be surprised. Now we have all kinds of stuff going on this week, quad witching, we have the VIX rollover, a bunch of stuff going on. So what do we watch for? Well, if we keep continuing to fall, well, the S&P 500 is going to probably continue to press higher and higher, and then we're going to look at these gaps because those gaps is technically, if it heads down there, these can act as areas of support, and then they might bounce from those levels. But as it stands right now, that's a very, very strong move to the downside. Don't be too shocked if we get some little boop, little hit to the upside here until it regulates itself a little bit, and then we got to watch really what takes place. And if you look at the weekly time frame, we tag the upper range of the VIX volatility kind of technical structure here, and we're starting to head down. And now we're pulling into an inclining 20-day moving average. That can technically act as a level of support. So if we get down a little bit more, like I said, we can bounce, and you can see here we're putting in higher lows. Right? So, I mean, there's something weird. There's something taking place. The Bollinger Bands are tightly contracted. We haven't seen them this contracted in quite some time. And the last time we see that, contraction leads to expansion. So, on the bigger time frames, it does say, like, hey, something big can happen. And it can happen at any moment. So, just be aware of that. But also note on the other time frames the opportunities that exist. Okay? If we look at the BPSPX chart, well, this is getting overbought or oversold. And when things get oversold, you can have breakdowns that occur, or you could have technical bounces. What has been happening is we've been getting bounces from these extended areas. So if it gets extended here, 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 we've been getting boom, 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 and we getting bounces. And today, well, we talked about that yesterday, and now we got a bounce. Okay, is that bounce going to last? I don't know. Here's something that I find interesting: the NASDAQ Summation Index. This was down on the day. Meanwhile, the S&P 500 goes up, so that's diverging. And this is one to watch, right? I mean, this could do a couple of things. You take this a couple of ways. This says, hey, like this means that if this starts turning up, the S&P 500, we can see a, what did I say yesterday? A face-ripping melt-up rally, right? You can see just a ripper to the upside, and that is a very strong possibility. However, we've seen big breakdowns occur when this crosses down through zero. All right, so we have a technical pattern that we've been seeing and tracking on the S&P 500 on the daily time frame. This is right almost by zero. There's another indicator that I will be bringing on another episode. It's called the NIMOT, and it's just it helps me oversold and overbought territories. But if you get a minus 300 reading on that, and at the same time you get under zero here on the NASDAQ Summation Index, we've seen very, very big sell-offs take place when that happens. And not to say that that will happen, however, if that does take place and we see that before a sell-off happens, maybe that can be a signal to us saying, okay, now let's start tightening up these stops or maybe taking some profits because, you know, something potentially could happen. It's primed for something to happen. It's happened before. Probability suggests, hey, if something bad can happen, this is maybe how we want to position ourselves. Last one on the S&P 500 area, the NYSE Advanced Decline Volume Line, big uptick today. We'll see if that continues to the upside, but that is breaking through this support. It's still diverging. It is still diverging, okay? I mean, the S&P 500 or the S&P 7, basically, you know, it's made up of pretty much nothing. And if you were following my tweets this morning, I was basically saying, like, you know, the anchors, the big tech, they're the S&P 500 anchors, because the big tech, they were not catching a bid, they were selling off. And that was a pretty big deal, because the S&P 500 was just kind of floating sideways to down as energy and financials were trying to just hold it together. Now, if everything was down, the S&P 500 would have fell significantly further, but all of a sudden they pulled the anchor in, and then big tech took off. And then that allowed the S&P 500, because, you know, the top 7 stocks in the S&P 500 are basically big tech. You know, it started ripping up and started rallying very, very hard. So tech is a big one to watch. Pay attention to NVIDIA. Pay attention to Amazon, okay? If Amazon's having a horrible day, it's very hard for the S&P 500 to go anywhere. Russell 2000, still in the middle of the channel. Not much, taking place. Nice update, like we talked about. Small caps had the better day out of all the other indices, but this could be potentially a bull flag forming right now. We'll see if we get a breakout in a continuation, but it's still trend trading. It's still range bound, okay? So if you buy into a breakout and you're like, yeah, I think I'm going to get up to this top range or maybe back up to this previous high 230, cool. Play that, maybe take some profits, but just know then you can always re-enter if we do start breaking out. But if this is a bull flag from here to here, well, in a breakout of this, that would take us technically out of this pattern. I'm not sold on that taking place yet, but we'll see. Now let's look at the 15-minute time frame. My UFO pattern, just kidding, head and shoulder pattern. It broke down through the neckline. This was the target. Missed the target, but we also said, okay, well, we might not get it because of the falling wedge. Falling wedge, we busted out. Guess what? Where did we tag? 5-day moving average. 5-day moving average was declining, okay? So it's still acting as resistance. So what does that mean? Well, we have a high, a lower high, a lower high, a lower high. So the trend is still short-term down. So yes, we had a good day, and you're seeing that through the indices, and you'll see that on the 15-minute charts. We had a good day, but it's not changing the trend. So yeah, we're seeing a bounce. That was the probabilities of happening. Well, now we actually need to see the bulls really take advantage of this. If they do not, the bears can still step in. They're still right there, and they have the striking distance away. So we need to see new highs come out of the S&P 500. We need to see the IWM start getting back above this 5-day moving average and having it start to turn back around. You need to see that happen, because as it stands right now, I wouldn't go long right here. I've already entered into long positions early in the morning and going into the close. That's what I did, and I took advantage of that run up. Now I have to just be patient and see if those are going to hold. my hedge longs are going to hold or if they're going to be sold back into, because there's positions that I've been in that are just like complete turds. They've just been going sideways. And then I get a big, like I had this one position, AGFY. I don't, you know, it's part of the Discord group. If you're in the Discord group, you already know because I said like, hey, I'm entering into this. And that, that dud has been going sideways. Today it had a 10% up day. But it's not like I'm up 10% on the position. It's just still been sideways. I'm up on the position and it's breaking out of a good technical pattern and it was a good day, but I have not been getting follow through. So like maybe I'll get some follow through. Russell Vol right here, we're looking at the RVX on the weekly time frame. Tag got above the upper Bollinger Band. Bollinger Bands were very tightly contracted. Now we're starting to reverse here. Week's not over. Still got some time. You know, we'll see if we crush down lower. But as it stands right now, we're still within this technical pattern. Let's look at the Dow Jones. I'm keeping this longer than what I wanted. Now we'll start moving faster. I'm only going to show the 15-minute time frame. We're back above the 5-day. You can see rising, falling wedge. We broke out. We just had this rip-facing rally. You know, we talked about the positive divergence. I don't want to beat a dead horse here. So just note, guess what? Same thing applies. 5-day moving average still declining. We need to see this kind of curl back up if you're a bull, and then start to slowly get back up. But you want to see the price digest and then head higher. If you get these sharp rallies can get faded, but also, I mean, if you get a sharp rally, then it could fade significantly. Then we'll start looking for support, and you'll start looking for the 5-day moving average. So that's always a possibility. But just where it stands now, 5-day moving average, it's still declining. Price made a very strong move to the upside, and we're not too far from being overbought. Let's look at the NASDAQ 100. NASDAQ 100 did not pull down into this area of support, and the 50-day moving average will keep continuing to watch that level just in case if it does. And at that time, I mean, maybe it's tomorrow, maybe it's not, but the upper Bollinger Band is starting to curl up here too, so that might come in confluence with support here, the 50-day. So if all that moves up and the price continues to pull back down, that to me would be a good buying opportunity. But we're not there yet. You can see we had some multiple red days. We're holding the 20-day moving average. It looks like it wants to have some follow through. So we'll see if it has some follow through. Here's the cues on the 15-minute time frame. This is where it gets a little sketch. We're overbought and we're back to this channel and it's acting as resistance right here. We're right above the 5-day moving average. It's also declining. Support held here. Now we got to say, okay, what is going to take place? So, you know, we talked about this the other day and we're like, I don't really see a good trading plan right here. And I still don't. I mean, technically, yeah, if you wanted to short this, but I'm just like, you need to just, I just don't like shorting this market right now unless if it's intraday. I don't like holding like things overnight shorting because you can wake up and it's 10% higher. You know, so just be careful. But as it stands right now, yeah, we're coming right into an area of resistance. We're overbought. If we get a gap up, I think tech would get faded into that. I think people would be like, okay, now take my profit, and then it's going to sell back down. We got to see it digest, consolidate, and then go from there. Okay, because that's just what we need to do. And if you look at the volatility index for NASDAQ, did I already show this? No, I didn't show this one yet. Yeah, and as you can see here, still within this technical pattern too. The RSI is still putting a little bit higher lows here. Meanwhile, you know, this has been kind of heading down. So, you know, it's all setting up to see a big vol spike. We're just not there yet. And if you look at the BP chart here, it's really matching the script. Come on now. This is one good thing to watch right here. So the BP NDX chart is coming into this 30 range, which can produce a bounce. So it says there's still a little bit more downside to go potentially, but if this hits here, I mean, this is the area where you start looking for potential long opportunities, just like we talked about in the S&P 500. And what's crazy is what happened last year around the same time, we had this false breakdown, okay? We had false breakdown of this little tight coiling pattern. It broke down, just like we're doing right now, and then it ripped up back to the trend line, but we had that August to September just crazy rally. Remember that? And then it got completely reversed. And everyone then was talking about, this is the blow off top, it's the end, right? And it felt like that because it was a monster move to the upside and then it got reversed. Can that happen again? Come on. Of course it can happen again. But we're also in that back to this seasonality period where typically volatility rises. And, you know, we're a few points off of all-time highs. So we just haven't seen it yet. Perhaps it's going to sneak up. And, you know, to be honest, like and this is the conclusion, okay? To be honest, like you could sit here and you could try to predict a crash. Technical analysis. Do not sit and chase waterfalls. I'm just kidding. Not chase waterfalls. Don't go chasing narratives. Everyone has a narrative. Everyone wants to be right. Ever since that Big Short movie, everybody wants to be right. I don't care if I'm right. I don't care if I'm wrong. All I care about is what I do about those situations. If I'm right about the market pressing and melting up, which I'm not predicting that, I'm not even saying that that's going to happen, but if I'm right about that, the question would be, did you take advantage of it? Did you look for stocks to go long? If you're part of the Discord group, you'll notice like all I've been showing is long setups. Okay, so there's times where I might sound more bearish, but you can be bearish and bullish the same exact stock and the same exact indice just by looking at different time frames. So when I look at a 15-minute time frame of the Qs and I'm all like, hey, yeah, in the daily, or if I look at the daily time frame, I'm like, yeah, it's bullish. I'm bullish. It's bullish context. Yeah, it's getting overextended, but it's still price action bullish. Then I pull up the 15-minute time frame and it's coming into an area of resistance and it's overbought. I'm like, I'm not going to go long there. I'd be more bearish right here. I can see a short-term sell-off. All right, so don't chase these narratives. Stop trying to guess. Are you bearish? Are you bullish? Like, I'm not. I'm not. I plan for both cases. Okay. If you're bearish and bullish, like Robert Kiyosaki always says, and I bring this up a lot, a coin has three sides: heads, tails, and the edge. Okay. You want to be on the edge and you want to look at both scenarios and then create a plan for it. Because if you create a plan, guess what? You can take advantage of when one of those things happen, and you don't need to be first to hit it. You don't need to be, spot on, but you need to be able to set up a risk to reward that makes sense and do that consecutively. Because if you can turn, what's a good way to point this? Okay, if you are right 51% of the time, every single time, you can find incredible ways to make money. All right, you don't need to be right 60, 70, 80, 90. You don't even need to be right 51% of the time. You just need to make sure that your risk to reward, and if you haven't watched that video on how I talk about that, like all my winning strategy has to do, I need to be right 3 out of 10 times to make money just because of how I set up my risk to reward, okay? I'm going on a tangent here. That's all I got for you on today's episode. I'll see you later.